Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we saw some wild moves after a pretty strong move down and then a huge rip back to the upside. We saw a fair amount of movement yesterday. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. If you are a regular returning visitor, do me a favor, hit that thumbs up, that like button. It lets the computers know that human beings are actually watching. And I have a question for you today. Question of the day. What is your favorite trading book? When you're looking for a good trading book, what is the book that you look for, or the best one that you have ever read? Do me a favor, leave that comment down below. I think it's good for everybody to see what are some of the best trading books that you have read. I'd love to see that in the comments. Okay, so let's go ahead and dive in. S&P this morning down 14 points, as about 0.5%, as we have coming off of some of the highs from yesterday. Now, I will say yesterday we were looking at it and we had seen that our 4-hour trend had given us a lower swing low and lower swing high, so we were looking at potential shorts. And this was really the breakdown area I was looking for on the 1-hour chart. However, what did we miss on the breakout? If anybody's looking at this, there's a reason why this breakout is not a false breakout. Why is this not a false breakout? This is not a false breakout because I didn't get basing immediately before the level. Okay, we have to look for basing immediately before the level if we're going to look for an area of opportunity. And when I say immediately before the level, it means I need a couple of candlesticks at the very least in this range in order for me to be willing to take a breakout. So this is not what I would consider a false breakout. Now, we did have a 15-minute level up above here. Price came into the level 1, 2, 3, 4, 5, 6 candles later. The market said, we're not really going anywhere. And it didn't get there till really the end of the day. So what's interesting is that tells us, okay, we should probably be looking to get out of this thing at about break even, because in this case, our stop had to be up above this candlestick at the tightest and possibly even up above this pivot. And so didn't really even come anywhere near the stop until, frankly, just a few minutes ago. And so there's no reason for you to have stayed into that position. So this is where discretion is the better part of valor, and we get out of those trades at about a break even when they're not going our way in our direction. So looking at the 4-hour as of now, we are still have lower swing lows and lower swing highs. We did put in a higher swing, a slightly higher swing than I anticipated, but we still did not get above this controlling pivot. Right now, this is our controlling pivot to keep our prices a bit lower. And so I need to look for still, I think it's best to look for areas and opportunities to get short. Now, we do have some demand in here that could serve as a bit of a stall point when we come back down into this region. So one of the things that I would say to do today is to look for price to give us a small time frame bounce into a quality area of supply. Now, the thing to consider is, do I want to carry something over the weekend that could leave me possibly exposed? And if you're going to carry something over the weekend that can leave you possibly exposed, you then will take a bit more risk. So just keep that in mind and be aware of that, that if you take something over the weekend, you're going to want to hedge it utilizing options. But I would look for somewhere in here a bit of a reversal, and I think that we may get a bit of a reversal off of one of these levels for a smaller time frame entry. Taking a look at this little wick over wick area here, you have an opportunity with for a potential reversal later today. As we kind of come back down into this region, I think this wick over wick could get you. Remember, we're looking, in a market that's fairly sideways, essentially in a range-bound area, which we are still inside of a fairly range-bound, wider picture. Take those little profits when you get them, because we're still kind of range-bound in that 4-hour. Looking at the Nasdaq, so in the Nasdaq, I did look at this unbalanced wick over wick as a potential reversal point. We did not get a really great turn off of that level. We got one little move down before then it just popped us right back out. And that's okay, because we are a bit premature because we're still a little bit range bound in our 4-hour trend. And so now I'll just wait for kind of the next level. In the Nasdaq, I really was thinking that we had a possibility to eventually make it down to this area in here for a big rally back up. The Nasdaq is still our strongest market, and where we would be looking for those bigger opportunities. Crude oil. So in crude, we've been analyzing the front month contract as well as the September. We did get a little bit of a breakout in the front month contract to the upside. In the September contract, we got a little touch, but no basing, right? We got no basing to tell us, okay, get long. Doesn't mean that we're not willing to get long. The difference now is that if you do get long, you get long on a pullback to a quality area of demand. Well, I don't really have a quality area of demand here to lean on until I come back down right into this region here. I think this is a pretty clean little area for an opportunity to get long. As we popped up above 30, but without the basing, there's really not a whole lot we can do. But we are near the top of this range. Let's see if we come back to the middle of this range. And this is really kind of our control line inside of this range. This is 50% of the way, so I think that could be a decent area for a little reversal. Next, gold. So gold, we did have basing before the level, and we got our breakout on the 1728 region, and then it popped up to this 1736 number, which was our other breakout line. Now we didn't get basing in front of that 1736, but it held as support after the breakout. So if you were able to catch this one, you're able to catch that for looks like it wound up running about 20 points at its peak. Even if you only pulled 10 out of there, you got a really nice setup for the day in gold. So looking at, the next trading opportunity, what I'm going to do is I'm going to look back to the origin of that breakout and this area here as a potential area for a reversal if we come back into there. And if we don't come back into there, look for kind of the next basing area for a breakout to the upside. Now, bonds and currencies. Our bonds and currencies have been very, very sideways and choppy and really just tough sledding overall in the bond market, in the currency market especially. Bonds, we put a couple of other levels in here yesterday. We're trading back to the highs of these ranges, which on the 4-hour chart, I'm still looking for a potential breakout above here, provided I get quality basing. Moving over to the Aussie, there was really nothing here in the Aussie that we looked at yesterday that was of any strong probabilities. And so since we didn't have very strong probabilities, I thought it just made sense to hold off on any new positions. And I think today is very similar. Can we go down to 15 minutes and heck, even to 5 minutes to find levels? Yeah, but you take a bit more risk and a bit more exposure when you do that. You do have this little 15-minute demand area right here that we could see a little bit of a reversal if price comes back down into this region today. So if you're looking for one that's, now remember, it's higher risk. And why is it higher risk? It's higher risk simply for the fact that our 4-hour is so sideways, right? Anytime your 4-hour is this choppy, you take a lot more risk on that smaller time frame trades. The euro. So in our euro position, we did get a little touch into our region. We got about a 2-to-1, 3-to-1 move away from that level. So that one actually worked out pretty well for a little bit of a reversal coming down to the opposing zone in here. But then we came back up and then just chopped along. So that one should have been a little bit of a profitable position for you based on yesterday's live trade room. The next area, I think, is do we have a potential for a breakout up above here? Because I think that would be the area to look. But remember, our 4-hour is very sideways. And so it's tough sledding inside of this kind of a market. Canadian dollar. So our Canadian dollar, we had this touch and go right in here, which gave us a pretty nice move away. Unfortunately, I had it set up as a confirmation entry. And on our confirmation entry, the next time through, we popped right through the zone. And so did not give us a reason to take an entry. And on our 4-hour, still very sideways. So now remember, when you've got the Aussie that's sideways, the euro that's sideways, the Canadian dollar that's sideways, why is that all happening? Well, that's all happening because we are sideways in the dollar, right? The dollar itself is what's sideways. And that's really where our until we break out of that range in the dollar, we're going to have a really hard time in these futures currencies, which are based on the dollar, right? So just kind of keep that in mind as you're looking at all of these positions to see what am I finding from a trade perspective. Looking at the Great British Pound yesterday, we had looked at a level that was really, really, really close to current price as maybe a potential very small short day trade, and price did come back into there, was this little high right here, and then it just boom popped right through it. But then we kind of did nothing most of the day, and this whole area becomes a kind of a controlling candlestick area. But on our 4 hour, it is a fairly tight window that we're still chopping around. I think that we could still have a breakdown from here. Now, there are still a number of you that are short our breakdown that we had the other day up from this region. And so if you're still short that breakdown, I think you have prices continuing to move. And then our Japanese yen position, we got a little bit of a breakdown off of this level. Price moved away. Didn't have the greatest of basing in front of it, so you may or may not have gotten into that position. And so now looking at a reversal, if a reversal is present, I think this is probably your best area right in here for a potential reversal going forward. All right, so it is heading into Friday, so remember that you definitely want to be cognizant and understand what are my exposures and what's my risk when heading into some of these positions. Oh, looks like our Nasdaq trade actually, just in the time that we've been here, has popped into our 15-minute level. And so we are seeing a little bit of a rally off of that 15-minute level, not a big one. And so just keep that. Remember, anything in here is lower probability. In this case, your target would be right here. This is your first target. It's a little 2-to-1. Now, why is this my first target? This is my first target because of this wick over wick position right here. I have to account for that as really the place where prices could hit up to there. And at that point, I need to protect some of the profits or take a little off the table. Remember, when we're in a sideways price action, you've got to be quicker to take those profits, and then allow it to have time to work in a stronger trending environment. So just keep that in mind. So this one, obviously, if you're watching this on YouTube, then you're probably going to have missed that one, but maybe you caught that on your own. Hopefully you're in front of the markets looking at some of the same levels that we're identifying here on a pretty regular basis. So, all right, everybody, hope you have a great day. Something you need, give us a holler, support@tradersarmy.com. I will talk to you later. See ya.